Welcome to this explainer. Look, if you've been bouncing around from trading style to trading style, dealing with what we call style fatigue, and you're constantly chasing those massive green candles only to end up deep in the red, well, you need to pull up a chair and really lock in right now. So many retail investors are just completely frustrated because it feels like the second they get into a trade, the market just instantly turns against them. The harsh reality here, it's because they're trading like gamblers, not following a proven system. So today, we are breaking down a highly requested strategy from our source material. It's called the $10,000 Blueprint. This is a repeatable, totally logical way to build your first 5 figures in the market without losing your mind or, your money to all the hype.
Okay, let's dive into this. We've got a clear 6-step logical blueprint today. We're going to cover escaping the gambler's trap, the swing trading advantage, selecting market leaders, timing your entry, managing risk and losses, and finally allocating your first $1,000.
Let's kick things off with step 1, escaping the gambler's trap and fixing your environment. Before we even think about talking about which stocks to buy, we really have to talk about where you're buying them. So I want you to ask yourself a super direct question right now. Are you trading or are you gambling? Most folks start their financial journey on these highly gamified apps because, let's face it, they look fun and they're really easy to use. But we have to confront the reality of these interfaces. When an app seamlessly mixes predictive markets, which, by the way, are structurally designed to favor the house, and sports betting with buying stocks, well, you're literally walking into a casino, not a brokerage.
Platforms designed for players, like Robinhood, for example, are actively playing on your ignorance. They want you constantly clicking buttons, reacting to confetti drops and flashing lights, right? But serious wealth building, it is not about constant activity. It is all about strategic positioning. If you genuinely want to get serious about building that first $10,000, you've got to migrate to platforms built for positioning. Think Webull, E-Trade, or Vanguard. Bottom line, you have to upgrade your environment if you want to upgrade your results.
And that brings us to section 2, the swing trading advantage, and why we are leaving day trading behind.
I know, a lot of people want to day trade because it sounds super exciting. But honestly, it's really not recommended for beginners. Day trading requires this extreme level of precision and psychological fortitude, which is exactly why over 90% of beginners completely fail at it. Instead, this blueprint points us straight to swing trading. This is the structured alternative where you hold a trade for more than 2 days. Doing this allows you to capture those bigger, much more meaningful market moves without needing to be glued to a screen all day long. Now, to effectively start this swing trading blueprint, the source material notes you're going to need a starting capital of about $1,000 to $2,500. If you don't quite have that yet, the goal is simple. Stop complaining and start stacking.
Moving right along to section 3, selecting market leaders using the smart money rule. So, the crucial point here is absolutely discipline. We're going to shift our focus to how we actually filter out the noise and find the right stocks. In this strategy, it demands absolute focus. You have to stop that chaotic habit of watching every single stock that flashes across the board. Instead, you're going to build a list of a strict maximum of 20 companies. That's it, just 20. But listen, these cannot be just any random companies. They have to be true market leaders.
So how exactly do we define a leader? We go by the double performance rule. A leader isn't just some stock that happens to be up today. A true leader is a stock that is actively doubling the performance of the S&P 500. To put that into perspective, if the S&P 500 is up 8% for the year, your leaders need to be up at least 16%. Why does this actually matter? Because that massive outperformance is a huge signal that institutional smart money is heavily invested. There's real momentum and massive liquidity driving that stock, and we want to ride that institutional wave.
All right, section 4. Timing your entry using pullbacks and basis.
Here's the thing. Even when you found a confirmed market leader, you don't just blindly press the buy button, and this brilliantly illustrates the patience required for swing trading. We are actively looking for a basing period or a pullback. Think about a stock that just went absolutely parabolic. It shot way up, and now it's starting to move sideways. It's consolidating. It's catching its breath. That consolidation phase is exactly what we call the reload.
During this reload phase, we have exact, non-negotiable technical conditions that must be met before executing an entry. First up, the stock must stay above both its 20-day and 50-day moving averages. This proves its short-term and medium-term trend is still pointing up. Next, we wait for it to physically break out of that sideways base. And finally, the ultimate trigger to enter is when it reclaims its previous all-time high. You don't guess here. You wait for the stock to prove itself to you by meeting these exact conditions.
Let's look at section 5. Managing risk and losses through a defensive system.
We have to pivot to defense now, because let me be very clear about this. Losses are completely inevitable in the market. The single biggest mistake traders make is getting emotionally tied to a losing trade. You absolutely must have a strict exit strategy. According to the blueprint, when a stock drops 10% from your entry, that is your first caution light. You need to pay close attention. If it hits 20% to 25% down, the trade is gone. You cut it automatically. Trust me, it is mathematically and psychologically far better to take a 25% hit and save 75% of your capital to fight another day, rather than letting your ego drive an 80% loss just because you refuse to admit you were wrong.
We really have to reframe our mindset around losing trades entirely. A loss isn't a failure, guys. It's literally just data. It's feedback straight from the market that you use to get better. By relying on logic and strict systems over your emotions, you protect your capital and, honestly, your sanity.
Finally, Section 6, allocating your first $1,000 and building the wealth engine.
Now, what's really interesting about this allocation is that when you initiate this blueprint, I urge you to stop thinking in terms of dollar amounts and start thinking strictly in percentages. Here's the precise breakdown of how to deploy that initial capital. You put 30% into a memory ETF, like DRAM, for instance, because AI is the dominant theme right now, and memory is literally the oxygen those AI systems need to run. Next, 20% goes into a cybersecurity ETF like CIEB, which secures a vital tech sector. Then you take 25% for a high-growth individual leader, something like Bloom Energy, which helps power these massive data centers. Another 20% goes to a rock-solid dividend payer like Chevron. And crucially here, you turn on DRIP, the dividend reinvestment plan, so those dividends automatically buy you more shares, compounding your growth right there in the background. Lastly, keep 5% in cash for a rainy day or a sudden opportunity.
The secret to this entire blueprint? It isn't magic, it's discipline. When you get your next $1,000, you don't try to guess what's hot that week. No way. You rinse and repeat. You plug the exact same percentages into the exact same system. That boring, repeatable execution is exactly how you grow from 1,000 to 10,000 and eventually up to a six-figure net worth. Growth is boring, but growth is how you get free.
So, we've broken down the whole system. You have the mechanics, the risk management, and the exact allocation. My question to you as we wrap up this explainer is this: what market leader are you adding to your strict list of 20 today? Take this blueprint, apply it immediately, and stay in position. Thank you so much for joining me, and keep stacking.